In this video we are going to talk about how real estate can make you a millionaire. So before starting this video, like this video and subscribe to our YouTube channel for future updates. There is no quick method to generate money or get rich in real estate, but by investing wisely, you may build wealth over time. You're surely aware that there are several ways to accumulate wealth, but one of the most effective is through real estate. Making money in real estate or lucrative investing, on the other hand, necessitates excellent advice, strategies, and determination. While real estate investing is a tried and true way to make money, it, like any other company, comes with its own set of risks. If you take the time to educate yourself about the process and the best tactics for generating earnings, real estate may be a wonderful vehicle for wealth growth if done right. Getting started in real estate investing is significantly easier if you have cash, a 20% down payment. However, many entrepreneurs, including those in real estate investing, start their businesses with very little money on a daily basis. Many of them start off by dreaming big and putting in a lot of work. Investors today have a myriad of options for real estate investment. There is no one-size-fits-all answer. Diversifying your portfolio by learning how to generate income through real estate is a great way to do so. You may, for example, purchase an undervalued real estate property, renovate it, and sell it to an investor if you have a large sum of money. You profit from the sale of the property for a considerably higher price than you paid for it after the work is completed. If you'd rather leverage your investment by using a mortgage to invest in a tenant-ready property, you may consider buying a long-term rental property or a second home where you vacation and rent out to others when it's not in use. You may enhance your wealth, hedge against inflation, and profit from a rising market by taking the correct actions. Here are some of the ways real estate can help you become a billionaire. Real estate ETFs and mutual funds are a great way to make money in real estate. You can buy mutual funds and exchange-traded funds, ETFs, that are broadly diversified or focused on a certain industry. You can also purchase ETFs and mutual funds that are invested in real estate. ETFs that invest in real estate companies, such as publicly traded home builders, can be purchased, for example. Some ETFs also invest in REITs. There are mutual funds that invest in property management companies and real estate developers. A fund manager is in charge of both investments. ETFs are passively managed, and mutual funds are actively managed. ETFs are less expensive than mutual funds and can be traded at any time during market hours, much like stocks. High liquidity and cheap expenses are two advantages of investing in ETFs and mutual funds. Forget about taking money out of your 401k or 403b to acquire rental property. Instead, use this technique to invest in real estate through tax-advantaged retirement funds. You don't need a large sum of money to begin investing this manner. On the other hand, you might not get any dividends. You might not get any money until you sell the appreciated stock. Appreciation of real estate leads to an increase in wealth. We term this appreciation when the value of a property rises. While appreciation is not always guaranteed, real estate prices have historically appreciated with time. Again, appreciation alone is unlikely to make you a millionaire, but real estate in the United States has always increased, averaging 3% per year over the last century. For example, if you paid $250,000 for a property 2 years ago and it is now worth $350,000, the appreciation made you $100,000 richer, or your assets increased by $100,000. Another sort of appreciation that might occur is forced appreciation, which is the concept of boosting the value of a property by physically upgrading it through renovation. Any type of appreciation in real estate gets you money and makes you richer. Real estate flipping is a way to make money. This is another tried and true method for making rapid money in real estate and becoming wealthy. The term fix and flip refers to a certain type of real estate investment. The investor purchases a property, pays for repairs and renovations, and then resells it for a profit. Several reality series have focused on this form of real estate investing. The truth is that this type of real estate investing carries a significant level of risk. You could lose money if you miscalculated the expense of rehabilitation. You've undoubtedly wiped out your real estate profit margins if you put too much money into the investment property, since you don't grasp your target market and buyer expectations. Every month the houses on the market subtracts the property's carrying expenses from your profit margin, whether there are issues with the selling price, the real estate agent, the neighborhood, or how the property looks. If you try to save money by doing the repairs yourself, the labor savings are countered by the time it takes to make the property ready for sale. DIY repairs that don't satisfy code or potential purchasers' expectations are a risk if you aren't already a skilled building contractor. Then you risk losing the entire transaction since you'll have to pay someone else to redo what you believed was done. A house that merely needs cosmetic renovations is excellent for a fix and flip, but they are extremely rare. Investing in mortgage notes might provide you with interest-based income. Mortgage notes can be an excellent real estate investment for those looking for a steady stream of income. You receive monthly payments that contain both interest and principal when you purchase a mortgage note. It's a consistent source of revenue, similar to what you'd get from a rental property, but you don't have to maintain it like a landlord would. Investing in real estate across the country is significantly easier because you don't have to deal with local real estate licenses or tax regulations. The loan term is specified in the mortgage note. You know how long you'll get loan installments, which might be anywhere from 10 to 30 years. By purchasing from a distressed note holder, you may be able to raise the value of the mortgage note. You might come upon a farm or a family home that is being sold with owner financing. The person who sold their home now has to deal with the loan. They may require the funds for a variety of reasons, including the purchase of a new home or the provision of cash to pay their retirement. In these situations, you might offer $80,000 to purchase a $100,000 bill. If they accept, you will receive the interest and principal on a $100,000 loan for which you only paid $20,000. A private lender with a sluggish or non-paying borrower is another type of desperate seller. They aren't getting the money they anticipated. They can be hesitant to foreclose on a non-paying relative. It's also possible that they don't want the property back. These notes can be purchased for a fraction of their face value. You'll have to either increase your collection efforts or foreclose on the property. Only buy notes like these if you have a strategy for monetizing the property, whether you want to rent it out, sell it, or renovate it. Paying off your debt. You make a monthly payment to the lender when you buy a rental property with a mortgage. There are two portions to this payment: principal and interest. The interest is the lender's profit, while the principal is the money you're using to pay off the loan. Your tenant is essentially paying down your loan for you over time, assisting you in building wealth on autopilot. For example, if you bought a property for $100,000 5 years ago and took out a $80,000 mortgage, let's pretend it was a 30-year fixed-rate mortgage with a 5% fixed rate, you'd only owe $74,000 now. You would owe only $65,000 in 10 years. This means that your equity grows year after year. As long as the property worth didn't drop, you'd earn value. After the mortgage is paid off, you'll have a property worth $100,000 or more that you didn't save for, even if it had no cash flow or broke even and never increased in value. Due to the debt pay down, your tenant paid it off. This will not be possible if you pay for the property with all of your cash or savings and do not use the financing choices. This is the most effective way to make money in real estate and get wealthy. What do you think about this video? Do let us know down in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.